Hello, Strato. Hello, Strato.
Yes, Daniel, I can hear you. Though Serato maybe has an internet issue.
Okay, how are you?
Yeah, fine. What about you?
I'm always okay.
You are now among the panelists.
Okay, yes.
So I think Serato, if is on board, he can just introduce you and you start. Serato, can you
Yes.
manage it? Okay.
Good evening, everyone.
Good evening.
Yes. Now we are ready to start this class. Good evening once again, everyone who managed to participate for this revision of strategic corporate finance. We are together with Daniel Kwesike for the revision of this course. It is session of 8 hours in 2 sessions, 4 hours. So I hope everyone will get something about strategic corporate finance, like how students can tackle the question, how can you link the case study with the given data, how to extract the data from case study, and so on. So without taking much time, let us give floor to Daniel for today's session.
Thank you, Strato, and good evening, everyone. I'm happy to join this revision class today, and specifically, we are going to talk about those areas that have been highlighted, how to succeed probably in this paper, and your success in this paper depends on how you have managed your time and the other issues, as we are going to talk about them today. So allow me to share the Excel sheet that we are going to use in our discussion.
Daniel, you have the right to present or to share the screen.
Okay, that is, I've seen it. Okay, so as the members have said or as have been introduced, we are discussing strategic corporate finance. We are discussing strategic corporate finance, and strategic corporate finance, it is a 80%, between 70 to 80% quantitative, or between 60 to 80% quantitative, and another part which is qualitative. But the success of this paper depends on more quantitative than qualitative, because many marks are based on quantitative part. And as the guideline provided, this paper is based on financing and investment decisions that you need to make, plus other aspects as we may look at the key areas. Now, how do we handle this paper? That's the first question that we need to ask ourselves. How can I succeed in this paper? I always tell my member that I always meet that first, so how to succeed? In this paper. The first aspect, you need to budget the time. Time management. Time management is very, very important as far as this paper is concerned. If you don't manage your time well, you may not be able to finish this paper. So time management is a key resource to your success in this paper. And based on the marks and time allocated, because the paper has got 100 marks. If you look at that, there is 100 marks and you have 210 minutes to attempt the paper. So if I use a simple mathematics, it means that each mark is allocated, if I use the simple mathematics, 210 divided by 100, I think we should get that each mark will be equal to 2.1 minutes. So once I identify that, then I need to answer the question depending on the marks allocated. I can give a good example. If a question is 10 marks, if a question is 10 marks, how many minutes do I need to answer this question? In this case, because 2.1 is the maximum, and when you are working, the important aspect is how are you going to save the time. So if I'm answering a question which is 2.1 mark, which is 10 marks, automatically this means I need 10 times 2.1 to answer. The maximum minutes you will need will be 21. Then you look at how are you going to save this 21 depending on the length and the strength of the question. Because yes, I can conquer that each question, each mark is 2.1, but not all marks have the same strength. You may find that some marks you can use 0.5 minutes or you can use 1 minute to get it, but other you need to use the 2.1, most especially those questions that are computation. You will need more minutes to be able to attempt. So if this is a theoretical part question, then it means that I can say I'm going to use 15 minutes to answer this question. If my 15 minutes ends, I should go to answer another question. So if you spend more than 15 minutes, it means you are reducing marks of other questions that you would have got. For example, if you use 30 minutes to answer 10 marks question, you have used 30 minutes to answer this a 10 marks question. In that case, you have taken 9 minutes. And if I get 9 minutes divided by the other 2.1 per mark, automatically I've lost 4 marks. That's how we end up failing. If you use more minutes, if you take more 9 minutes on the question, you have lost 4 marks already that you would have got from other questions. So it is very, very important to be time cautious, to manage your time very well. If you don't manage the time, you are going to lose the marks because it is very hard to finish if you have not managed your time well. That is the first important thing when it comes on how you can pass this question. Now, if I get to my second part, analyze the question very well. You know, you are fighting with two things here. You are fighting with time, but also you need to ensure that the question is well understood. Analyze the question very well. Try to relate the question to what you have already covered. So pick the key data in the question. If it is a case study, try to relate your case study to the question that you want, to the topics that you have covered. Analyze the question very well. Each question has got a key information that you need to capture. So if you don't identify the key information in the question, chances are very high that you may end up misfiring the question. Analyze the question, analyze the data very well. So that is a key part. And another thing that I always say, we are not angels. I conquer. We are not angels. You can't know everything in a paper. You may have an idea on some questions, but you may not know everything on the in the paper. Where is your competitive advantage? Identify that. Where do you have a competitive advantage on the question? Do you have a competitive advantage on part A? Do you have a competitive advantage on part B, on part C, or on part D? It's not a must that you should follow, you should answer the question the way the questions are follow each other. There is no harm to start with part B, part C, and then where I don't have a competitive advantage, I answer it later. But I first capitalize where I have a competitive advantage. So always get that in the information, get that in the question. Where do you have, identify that, where do I have the competitive advantage? Then I should first get where I have the competitive advantage. When I say competitive advantage, I mean where is your strength in the question? Because a question can be having part A, B, C, D, but your strength in that question is C and D. B you can try and A you can try, but you are very sure of part C and part D. Then I don't need to first do part A and B to be able to attempt part C and D. I can start with the way I have my strength, part C and D, I get those marks. If I can try part B, I try where I can manage. And if I can try part A, I can try where I manage. Then I can go to another part where I can have, which I can be able to attempt to well. Because as I already said, the issue in these professionals is fighting with time. If you don't fight with time, then it can be very hard for you to finish these questions. And if you don't finish, chances are very high that you may not be able to make it. If you don't finish the questions, chances are high that you may not be able to make it. So try to analyze the question, get those parts where you are strong, capitalize on those parts where you are strong, and then move on with other parts. So that is a brief on how you can be able to succeed in this paper or in these professional papers. Manage your time very well, analyze the question, identify parts where you are strong, and first attempt those parts where you are strong before attempting parts where you are not okay. Then, after looking at that, another important aspect is about answering the questions. Before we look at the key areas that we may need to talk about in this part, answering the questions. Most especially, if you look at our most questions in advanced, I think they are case study questions. Most questions, they are case study questions. Now, when you are attempting a case study questions, try to look at what are the key issues that someone who is talking about in the case study. Sometimes those key issues can be examples in the question you are going to answer. Sometimes they may be the real points that you are supposed to give out. So read the case study, highlight the key issues that the person or the examiner is talking about in a case study. Relate your case study to the questions that are being asked. You find that each part of a case study may be answering a given question. So try to relate the case study to a particular question, or try to relate a particular part of the case study to a specific questions in the requirement. We are going to look at some of these case study and see how do we get the data from this case study. You can only get the data from the case study if you know what is required from that particular case study. If you have not linked the case study with the question, then it becomes hard to get the data out of the question. So link the case study with the question. That is going to help you to identify. That's going to help you to identify the key information in the question and to get data or to extract out data from that particular question. So here we need to link the case study with the question or with the required. Then extract data. Extract data from the question, from the case study. Some data may be too comprehensive to extract, but some data are very easy to extract from the question. For example, if it is financial statements, maybe you're going to analyze performance. In that case, it may be not easy for you to extract data from that question. But if maybe you are going to, for example, you are looking at valuation or you are determining cost of capital or what, in that case, it can be very easy to extract some of the data from the question. So in this case, try to extract data from the question. But the first part is to link the case study with the question. Then once you finish to link the case study with the question, then you can extract the data from the question. If you don't do that, you're going to misfire the question. You'll find that you have extracted the data that does not answer your question, and that is a fail. All this is in our 2.1 minute that we are looking at. We don't need to exceed the time allocated to the question. And each question has got its time. That one you should know. Each question has its own time. I can give an example. If I'm answering question number 1 case study, question number 1, which is a case study, my case study is 50 marks. 50 marks should take a half of my time. The moment you enter 2 hours, you are finished. You have left it. So everything you are doing here, getting that out of the question, linking the question with the case study, you are doing it in that particular those minutes that are allocated to the question you are answering. So link the case study with the question, extract the data from the question, but don't forget that everything is done within a specified time that you are supposed to answer the question. Every question has a time allocated. Every question has a time allocated. Don't look at the marks, then look at the time allocated to the question. Then everything you should do should be able to be done in that specific time. We can look at a simple case study. I had copied it in Excel. Probably we can look at it. This is a case study in the paper of 12,000 and it is a paper of 2016 December. This is a paper of 2016 December. So this is a paper of 2016 December. It is question number 1. I want us to look at this question and we see how can we be able to get data related to our question in this case study. Before we look at how, so if I read this first, I can first maybe check my questions that I'm answering. Discuss any 4 factors that Cassin should take into account when deciding on the mix of debt and equity finance. That is factors when you are deciding the level of the gearing level in the question. What are the factors that should be considered to decide the amount of debt and equity? That is capital structure. This question, yes, I may need examples in the question, but this question I can as well answer some points without taking into account. Then I can only use the case study as examples in the question. So if you are deciding the level of gearing, what can be the factors to consider if you're deciding the level of gearing? Because that's what the question is looking at in this case. The mix of debt and equity. That gives you the level of gearing. So if I'm deciding the level of gearing in this, what should I consider? I'll consider the risks associated with the business, the financial risks. Will I be able to pay? The cash flows that I have, the stability of revenues. I need to look at that. So this question, if you look at the way it is, yes, I may need some example, but I can still get some marks. I can get marks without looking at that. So when I'm answering this, then I can write this one. I can start with this. I write some points. I leave a space. Then I can go through back again to answer. Then if I look at part B, discuss any factors that venture capital would take into account when deciding whether or not to invest in the company like Legacies. Now, when I'm answering this, these factors are there in the theory. The factors that the venture capital look at, the business plan, the market survey, the different things that they have, they look at. So since this one is maybe it's an ongoing, it can be even an MBO. I can write a point, I leave 2 lines, or I leave a line to write an example. I write another point, I leave a line to write an example from the case study. Because these are points that are clear, are theoretical. Now, if I read this question number C, advise I've already got 16 marks, or I've already got like 12 marks without reading the case study. I've already like 12 marks. I need examples, or I need something to be able to put into here. But these questions, I've already answered them here. These are theories which are known and which can be used. I only need examples from the case study. Then, if I go to part C, advice on the viability of it. So in this case, this is a question that requires me to evaluate. This requires me to get data. Do I manage it? Because based on net present value, I need the cash flows, I need what. Yes, I can get some marks from it. Yes, Claude. This is 2016 paper. I think you entered late, Claude. 2016 June. Is it June, December? Let me verify. December. Now, if I come to, as I was saying, question number 1, question number part A, part B, I can get 10 marks from this part very easily by just referring to the theory I have. Question part 2, it requires me to analyze a project because they are diversifying into housing. So I need to analyze the housing business based on the data that I have in the case study. Then part D, they want me to advise the board on a potential percentage gain on Gasin's share under each of the 2 proposed options by Simba. So I need to look at this. This is a major part. This is a investment appraisal. This probably is a merger. I've not read this. Discuss Gasin's current return on equity and the dividend yield, and how they could how the 2 could be impacted in the event that the law on capping interest rate is introduced in Rwanda. So this one also requires me some calculations. But these 2, they never required me calculations, and I could be able to answer. So now, once I can go this, I can now check my case study. In my case study, it is about a mix of debt and equity. The second case study, it's about venture capitalist. The third question, it's about to evaluate. So if I can go to my question here, they are saying Gasins is a manufacturer, and this one, Gasin is currently owned by 5 shareholders who are relatives and 4 whom are involved in the. So this one is not even helping me anything. Gasins is finalizing a 5-year strategic business plan, the best of Gasins by 2021, that is intended to. Two of the already agreed objectives are to double the asset base. They want to invest in more asset, to increase the return on equity at least 25% by the end of the strategic plan. So that is that they have some major decisions and the guidance, however, required in the interim assist the board either laying foundation. So this one there's no way I'm meeting it. Then funding for a 2.1 factory extension. Available research indicates that Gasins is currently satisfying only 75% of the potential market with existing product. A viability study conducted by management also indicated that this expansion is only viable if implemented not later than the first quarter 1 of the year 2017. The major challenge for the board is whether to finance this project by debt or by mix of both in what proportion. This is a capital structure. That's the first part of the question. So this part is helping me to answer my first part. And they are saying down here, a viability research indicates that Gasins is currently satisfying. It's repeated, sorry. It should be noted that previous board meeting, the board chairman had hinted to the management that we need to deliberately create conditions that will make Gasins attractive to venture capitalists. This is part. So if you look at this part, it is about the case study. There is no even no. If you look at it, there is no point that you are going to use from this sentence, this part. So it means this first question that we are talking about here, you only answer using the theories that you have. You are not going to base it from the case study that you have. Because if we read our question, this is the part that is having here. So you need only maybe to refer to Gasins as you are answering. Then another part is this part on venture capitalist, which is answering our second part of the question, the case study. It's about venture capitalist. Do we have any point that we can take from this case part? It should be noted that during the previous board meeting, the board chairman had hinted to the management that we needed to deliberately create conditions that would make Gasins attractive to venture capitalists. The chairman had said that this in response to a suggestion that venture capitalists should be approached to finance this project instead of asking shareholders to increase their equity stake. In this regard, management is required to generate a list of issues that venture capitalists would want to see in a prospective investee company so that Gasins can start putting its house in order. So what are the issues they are going to look at? This is what I said. When you are answering part A and part B, automatically just use. For example, if I'm answering this one, what are the issues the venture capital look at if they are to invest? They want a very good business plan. They have a very good financial plan, a very good market research, operation, the way the operations are going to make. Those are items within the business plan that you are going to look at in this case. They want to see what is your financial plan? What is your market research? What are you going to manage? What are your management? Then from this, because you can be able to answer this question without even sweating with the calculator. 16 marks very easily. Then that is the first part we have looked at. And then come to, we have this part, which is, I think it is answering the part C, part D. Advise the board of potential oligacines which share under each two proposed of Simba. So we are having this Simba Holding, a listed conglomerate with wide range interest in manufacturing and construction, has offered to take over Gasins. Simba's objective in this transaction is to boost its own market valuation that appear to have stagnated over the last 2 years. Simba is offering to pay for the acquisition using one of the two options. So this is a merger. So if it is a merger and this information is simple, I can be able to capture some of the data that I have. So if you analyze the first option, option one, I have a cash offer. So if I have a cash offer, what do I need from this to answer this part? Because the question is asking me to advise the board of Gasins under each of the proposed option by Simba. My decision is going to base on the gain or loss based on the offer. That's the decision you are looking at. The decision you are going to make is based on, because if I'm advising to accept, it's going to depend on the gain. If to reject, it's going to depend on. So the decision is based on either a gain or a loss. So now if I'm answering it, if it is a cash offer, what do I need? I need the price per share. Do I need it? 6.1. That's the offer. Then what else do I need? I need to know the number of shares. That is going to help me to get the purchase consideration. The purchase consideration. If I have the number of the price per share that they are offering, I have the number of shares they are giving, they are taking, then I can get this. Now, this is the purchase consideration. Remember, I want to find a gain or a loss on this part. Then it means what other information I need to look at? The current value of Gasins. What is the current value? To get the current value, I need to get the market price of the shares of Gasins. Market price. Is it given in the question? Then I can check. This one is the offer. I think to make it clear. This one is the offer price. This one, I need to get the current value of Gasins. And to get the current value, say, what we have been given, the current PE. The current PE of Gasins. The Gasins price earning ratio is currently 25%, which I have here, 25%. And they also advise that Simba could achieve a synergy saving of 25% on Gasins equity value by reorganizing the management and the staff. And this, so we have a synergy. This is a different information that I can't use here. A synergy. which Gasins is not even taking. Maybe it is a different 25% of the value of equity. So now, what I need here. I need this profit after tax. I have the PE because what I need in this statement, because I don't have the value, I have they have told us uh, the Gasins price earning ratio is currently 25% higher than that of Simba. So what is the PE of Simba? I need this PE of Simba. Is it given? That's the question I should ask myself. Once I have the PE of Simba, I can get the PE of Gasins, and which is going to help me to get the other data that I want. Now, if I look at this, what I have in the question, they have given us the current market price, because that's now we need what to look at. The current market price of Simba, price of Simba, which is 3616. I have the earnings after tax of Simba, so I have because this is the profit after tax, which is 3,209,200, the earnings after tax, which is 3,029,200, and I have the number of shares. The number of shares of Simba, which is this is the share capital. I get 350 divided by 500. 3550 divided by the price per share, and I get 355, or I can even get it here. These are the shares. Now, if I have the number of shares, I have the EAT, I have the price. Can I be able to get the PE? Remember then I can get the EPS here. My EPS is EAT divided by the number of shares. I can get my EPS. And once I have the EPS, I have the PE, I have the price, then what is my PE? PE is equal to, if you get the formula, it is price divided by the EPS. So in that case, I can be able to determine the price. So once I have this, I can be able to get this data, I can get this market value. But the information was, how do I get this information? Look at the data, analyze them, know how to use the data given in the question. Now, if you look at this question, we are not given this current market price, and they have only told us that the PE of Gasins is 25% of the Simba. You didn't have information on the price of the Simba, but you were given, I mean the P of Simba, but from the data you were given the price of Simba. You have the statement where you can get the EPS, so you can see how to link the information. So it means if I'm getting my PE, it's going to be using this information. It will be the price divided by my EPS. So my PE is 8.45, and they told us from this that the PE of Gasins is 25% above. So what is the PE of Gasins in this case? It's going to be, if I can put this, I can put it here at 25%. I can say that the PE will be 1.25 times what I have here. This is the PE. I think because of this 1.25 times this. This one is the PE of Gasins. Remember the question we are answering. We are evaluating the gain, or because you want to advise Gasins whether to accept. His accept is going to depend on his current market price, on his value, and on his. So now, once I have the PE, I can get the value of Gasins. Once I have these earnings here, this is the earnings after tax of Gasins. So once I have these earnings, then I can get get the EPS, because I've already got the PE. I can get the EPS of Gasins, and then I can be able to get, or I can get the PE times the earnings, and then I get the value of that company. So what do we learn from here? Learn how to link the information. Learn how to link the information. Look at where we started with this part of the question. The question was asking to evaluate the value, whether Gasins should accept. Valuing Gasins, it will depend on his current value and the purchase consideration. But the data we had were very different. We are very in different parts. So we needed to collect those data and put them together to be able to get what we want. So from this now, I can be able to make this decision. This is the offer price. How many shares do they have? I can get them from here. The number of shares here, because each share is 5, so I can get the number of shares here, and I get the purchase consideration. Number of shares, it is 425 million divided by 500. 425 million divided by 500. These are the shares of Gasins. So what is the purchase consideration? It is this times this. This is the current purchase consideration. So what is the current value? I've already got the PE. I have the earnings. The earnings of Gasins is 454,750. 454,750. If I add the zeros, Oh, I didn't put the earnings here. I didn't put PE here. Then I make this one my earnings. 454, 750. 454. Ooh, why do I have a point here? Four 54, 750. Now, what's the current value? Will be this times this. Now, I can compare the current value. This is the current value of Gassins, and this is the purchase consideration. Automatically, there is a gain of something, so Gassins should accept the offer, the cash offer. I don't know if you are looking at how we have got this data. We were not given the number of shares. We see how to get them from our report. The market price, we are not given, but even the PE we are not given. You had to first compute the PE of the previous question. Here it is 320, 200 instead of 3A. Of which company? PC, I don't know. Did I copy wrong data? 3209. 3209. 3. I think I copied wrong data. 3209. It's like this. 32. Okay, but it's still our data has remained the same here. So that is how we have managed to capture the data in the question. That's what I was saying. You look at the data, link to the questions, try to look at the different aspects where you can be able to get this data. So that is how we get this information, and that is how we can be able to solve it. Now, is the question complete? Advise the board to potential board of Gasin share under each of the two options by Simba. So it means I need to get this was the cash option. So my conclusion, because it's an advice, based on the gain realized. Yes, Claude. Unfortunately, I don't. I think, let me see. Yes, Claude, you can ask your question. Hello, the microphone is open. You can ask. Yes, Claude, someone was raising the hand. You are not seeing what I'm writing. I don't know what is the problem with the screen. The microphone is open. Please ask your question. Hello. So this was the cash offer. I don't know if now it is okay. Is it moving or it's not moving again?
Excuse me, sir.
Yes, please.
How about the synergy value?
The synergy value, we are going to analyze it because when you're evaluating the synergy, you can evaluate it in the shares, but on cash offer, you are not going to evaluate the synergy.
Okay.
Yeah, you can evaluate the synergy on the share offer.
Okay, sir.
Yes, another person who is raising the hand. Is
Hello,
my
sir. I'm not seeing the screen.
I think check your setting. You can check your setting. And yes, although we have started answering this question, but my guidance was how do we get data from our question? That's what my interest in this. How do we get data from question? So based on this data that we have now collected, link the question to the data. Link the question to the data that you have. Try to understand what has been asked from the question. I don't know whether my screen. Please remember, do you see my screen? Or I should reshare? Hey, sorry. Yes, it was paused. Okay, it is okay now. I don't know who had paused it. I think it is okay now. How comes it? Okay.
It's okay
Yes,
now.
it's okay now.
I don't know how it had been paused. Now, as we are saying, try to get data from the question and try to link the data with what you are solving. If I'm to look at maybe the second part of the question, the option 2, because our question they are saying us, advise the board on the potential gain of Gasin's share under each of the two proposed options. So the first option, we have said that Gasins should accept the offer based on the gain realized. Gasins, I don't know how to write Gasins. Think like this. Should accept the offer based on that one. Now, if I analyze the second option of the question, the second option, it is a share option or a share offer. Now, another one, when I'm answering this, what do I need to answer this part? Yes, Emmanuel. Hello, Emmanuel, the microphone is open.
Sorry, sir, I raised my hand before I was unmuted, but I asked the question about synergy and you answered it, sir.
Okay. Now, if I'm answering this part on share offer, what do I need? First, I need to know the exchange ratio. The exchange ratio. The question is, do I have it? Based on the data I have, they are said they are giving 3 of each shares for 2 shares of Gasins. Means my exchange ratio is 3 to 2. That information is clear. I have it. Which other information do I need? I need to know the existing shares of Gasins. What is the existing shares? Shares of Gasins. If I'm to answer this, how many shares Gasins have currently? Gasins has got, we have already calculated these shares here, I think. We got this, these are the shares of Gasins. These are the current shares of Gasins. Now, if I have the current shares of Gasins, if I'm answering this, I have the exchange ratio, which is 3 to 2. I have the existing shares of Gasins. Then my second question, how many shares am I going to issue to the shareholders of Gasins? The new shares to issue. How many shares am I going to issue to Gasins? So Gasins will get 3 shares for every 2. Means it's going to be 3 over 2 times the existing shares. Is going to get 1.275 thousand shares. These are the shares that is going to get. So at how much are you going to give? Because in this question we are not given the share offer. It means these shares are going to be acquired at the current market price of the shares of Simba. So my price will be the shares of Simba, which is, I think, this. Now I have the share, I have the purchase consideration. What do I need again? I need the purchase consideration now. Which is this times this. I've already computed the current value of Gasins. I don't need to compute it again. What is the current value of Gasins? The current value of Gasins. I've already computed it here. The current value of Gasins is this. This means I will have a gain of this. But which offer makes more gain in that case? This is the gain on a gain on share offer, on share offer, and a gain on cash offer. The gain on cash offer will be this minus this. This implies that Cassins should prefer a cash offer than a share offer. So you see how we have got this information. So we have now answered. We have answered the first part of the question. This because this one we have answered it. This one we have answered it. We have answered D. Now you can check other data. So this is to show you how to use the data from the question. How do we use data from the question? So if I maybe I check the other part of the question, and based on this, I can first answer this, discussing the current return on equity and the dividend yield. What's the current return on equity? So what's the current return on equity? I can get it from here, from this data. The current return on equity. I have the earnings. I have the total equity, which is this. I can get this plus this. I have already the total equity. So what's the return on equity? Return on equity. So return on equity, I already have my equity, which is 2564,260, and I have the profit after tax or earnings after tax, which is 454,750. So what is my return on equity based on this data? Return on equity is 17. It's almost 18%. And what do they want? To increase the return on equity at least 5 and end to increase the, this is the, and then what's our dividend yield? How do I get dividend yield? To get dividend yield, I need the dividend per share. I need the price per share. To be able to get the dividend yield, I need the DPS. I need the price per share. Now, what don't I have? DPS, I can get it from here. It is very simple. Because I already have the number of shares, I have the dividend distributed. The dividend distributed, I have it, which is 204,638. So I have my dividend. Dividend is 204,638. 204,638. I have the number of shares, which I think we calculated up there, which is this. Now, what is my DPS? I just get this divided by this. I have the dividend per share. So if I have dividend per share, I need the price per share. And to be able to get the price per share, I already have my PE. I already have it as 10, which I already calculated. What I need here is the EPS. I have the earnings here. I can get the EPS here. Divided by, I'm showing you this such that you can be able to know how to play with the information. How do I play with the information I have? That's why I'm showing you this. No, I have this information. I have this information. How do I get this? So if I have now the EPS, I have the PE, then I can be able to get the price per share here. So the price per share here will be this divided by this. So multiply by this. I have the price per share. Now, once you have the dividend per share, I have the price per share, I can get the dividend yield. And because you get a dividend yield, as you know that it is DPS divided by my price. I get the dividend yield. So it means if I have my DPS here, which is this, divided by the price, I have my dividend yield. So on every book investment in the share, that's what you are getting. And the question, what does the question requires us? Discuss the Gasin's current return on equity and how the two could be impacted in the event that law on capping interest is introduced. So once I have this, then I can relate to the theory and discuss this. Because now I have that the return on equity is 18%. My dividend yield is this. Then I can relate it to the theory and answer the required question. I'm explaining to you this part for you to be able to understand how to use the information, how to link the information with the question. If I have this, how can I use this to get this? If I have this and this, how can I use them to get something else? So that is so it means in that case I have so far answered the 4 questions, because I've answered this, I've answered this, I've answered this. I mean this one, I've answered now this. What is remaining is on this one. So if I'm to answer, this one requires me to get any PV. What is the data to get any PV? It is answered by this data. This is the data that is answering this part C of the question. And how can I answer? So if to answer this, so because the question requires us to get any PV of the two proposed projects, and they said diversification into housing sector. As part of the strategic consideration, the board is faced with the need to somehow diversify the operations of the company within the next 2 to 4 years strategic plan. The board is therefore desirous of establishing the financial viability of the potential housing project in the outskirts of Kigali. The estimates of the outline below are part of the research findings about the project, which research had cost 145 at the time when the Rwandan francs was this. Now the key question when it comes to investment, is this part relevant? Yes. So now the key important when you are analyzing investment is to identify whether the cash flows are relevant or the cash flows are not relevant. That is the important aspect when it comes to investment appraisal. Now, the company has already conducted a research of 145 at the time. Is this cash flow relevant to the question or not relevant? Suppose it is to go on with the decision or not to go on with the decision. Will this money come back? That is the key aspect when you are answering question on investment. Analyze whether the cash flows are relevant or the cash flows are not relevant. So this one is already a bygone. Even if the project is to go on or not, that money can never be recovered because the research has already been conducted. Then they say the project would involve construction and sale of 300 residential and commercial houses over the next 4 years in the following proportion as indicated by the existing demand. Commercial, that is how they are going to sell. 20 in the first year, 35, 40, and 25. Residential, that is the value. Then they say the construction site which is already available would be acquired at this. This is an investment. This money is irrelevant. The house shall be built on a completed in the year of sale. So each house will be built and completed in the same year of sale. So if there are 20 houses here, the 20 houses will be completed in year 1. If there are 35 houses, they are going to be completed in year 1. And they are sold in the same year. The project shall require Gasins to increase working capital by 1.5 billion, which shall be recovered at the end of the project. So you will need a working capital of 1.5. But at the end of the project, that's at the end of year 4, you expect the money to be recovered. So this is the information they have. So you see how we are looking at this. These are the selling price, these are the variable cost for each. Then they say, selling price and variable cost of construction is in the current price. There is no inflation when you say that. Before allowing for selling price and the variable cost construction inflation, so there's inflation on selling price of 4% and inflation on variable cost of 5% per annum. So you need to adjust your cash flows for inflation, sorry. Then they say again, infrastructure cost inflation is to be 3% per annum. So if you are to own infrastructure, you will pay 3% per annum. Since pay income tax 1 year in earlier at annual rate of 30%. The company can claim a capital allowance on purchase cost of development site at 25% per annum on reducing balance basis. Gasins has a real after-tax cost of capital of this per annum and a nominal cost of capital of 14. Now, since you are adjusting for inflation in this, you are supposed to automatically use nominal cash flows. So this part is now answering this one. You are supposed to arrange your cash flows, and after arranging your cash flows, then you can be able to estimate the cash flows. I don't know if time can allow us to do this, but if I can try it, we can put in the data and see how we can handle this. Now, if I can, maybe in this case, because it may not take it, revenue, maybe for residential, we can talk about few of them. Revenue for residential, this is year 1, year 2, year 3, year 4, year 5. Oh, it's year 8, since I have if I'm to answer this, I'm trying it. What I'm showing is how do we link our question to the case study we are answering. So in that case, I'm linking this part with this question number C. So now, if I look at this, the units, how many units do I have for residential? Because that's what I've taken. This is 35. This is 45. Here we'll have 55 units, and these are going to be 45 units. And what is the selling price per unit? selling price per each unit in I think in millions. The selling price in a million. For commercial, for residential it is 85, and it is constant. Then I have an inflation. Inflation, they told us that the inflation on selling price is estimated to be 4. That's the information on selling price. It's going to be 4. So in that case, it will be 1 plus 0.04 power n. So this is 1 plus 0.04, then power 1. So I would so in that case, my revenues here will be the units times the selling price times the inflation. These are for residential. I can do the same. We'll be working it too, or I can. What is the variable cost here? Variable cost, residential. So the units are the same. What's the variable cost for residential? Variable cost is 50. This is the variable cost per unit. Variable cost per unit. These are the units I'm going to sell. And here I'm going to have my inflation. So in this case, I'll have 1 plus 0.05, then power this. Then I have my inflation. So my variable cost will be this times the variable cost per unit times the inflation. This is the variable cost. Which data do I need? I can need also for the commercial. Selling price for commercial. Selling price for commercial. For sales revenue, sorry. Sales revenue commercial. This is working number 3. Still I have year 1, year 2, year 3, and year 4. How many units of commercial do I need? I need 20, 35, 40, 25. 20, 35, 40, then 25. These are the units of commercial that you need. What is the selling price? The selling price for commercial, it is 60. Remember, our figures are in a million. Selling inflation, I can just copy this one because it is the same. Then I have this times this times this. So these are my revenues if I invest in a commercial. What will be the variable cost commercial? That is working 3. Working number 4. Variable cost commercial. I can take the same. These are units. What is the variable cost per unit for commercial? Variable cost per unit is 30. Inflation is the other one that we have already calculated. I don't need to calculate again, so I just copy. Then I can have the variable cost. Times this, times this. Now what do I need now? What is my total revenue? What is my total variable cost? So my working number 5, I can have my total revenue. Which is going to be the revenue here plus the revenues here. Then I have the total variable cost, working number 6, total variable cost. Same. I have this plus this. I can get a contribution if I have that. Which is this minus this. So this is what I can take. So which other information do I have in here to use? remember we need NPV. If I need NPV, I need to get all the cash flows. Now, there's something I'm not seeing here. I have the working capital. They told us our investment cost. They have told us it is 2.8. We had reduced it, so it means if I reduce, it is 2,800. If I reduce the figures, we are giving the figures in millions. I think it makes sense. Then working capital, I also have it. It is 1.1. 100. That's the money we are going to invest in working capital. But they told us that working capital is recovered. It is here. The working capital shall be recovered at the end of the project. Shall got to increase working capital by this. So the only thing that I'm not seeing in the question is infrastructure cost. I don't know if there's a part I did not copy from the question, the infrastructure cost. Can I go back to check? As if there's a part I did not copy, which is infrastructure cost. It is 1.2 billion per year. There is a part I did not copy. Infrastructure cost is 1.2 billion. It is even here. I was not seeing it. Infrastructure working. That is, I'm making it my working number 8. Infrastructure. So the same year 1, 2, 3, and 4. Now I have the cost, which is 1.2, which is this. It has an inflation which is 3%. 1 plus 0.03 power n. So here it will be 1 plus 0.03 power this. So now I can have my cost, which is going to be this times this. What else do I miss in the question? I can go back. I've already all my data, summarizing all the data that are needed in this question, which are relevant, the cash flow that are relevant to the question. Another part that is here. The company can claim a capital allowance on the purchase cost of development sites. So these are development at over the 4 years of construction. So I need the tax allowable depreciation. tax allowable depreciation. That is going to be my working number 9. Working 9. So I have year 1, year 2, year 3, and then year 4. So the cost, we already have it, it is 2.8. Our depreciation is 25%. So it means depreciation here will be 25% times 2.8. So this is the depreciation. This is the book value. And this is our tax allowable depreciation, or what we call the tax saving. So the net book value here will be 28 minus 700. So here is this times 25%. So here you're getting this times 30%. I'm not computing a tax allowable balancing charge because the question has not given us a residual value at the end. So I'm ignoring the balancing charge in this case. Now the question is finished. What is remaining now is to arrange our data. I have the contribution. I need this infrastructure cost. I need this saving. Then I can be able to compute my NPV. So if I'm to get my NPV, I use nominal rate since I have already adjusted for inflation. NPV at 14%. So year 0, year 1, year 2, year 3, year 4, year 5. My figures are in millions. I think you should remember that. So contribution, I can just copy this. This is working 7. This is my contribution is here. Then infrastructure, which is working 8. So what is my EBT, earning before tax? And they told us the tax is paid in area. So my income tax will be this times 30%. Because the tax is paid in area, the tax of year 1 is considered in year 2. So what is my EAT? This is my earnings after tax. Then I can consider my investment cost. Yes, Rugaruza. Yes, Rugaruza. I've seen your hand up, which I've already summarized here. Please, the microphone is open, you can ask. Working capital. It is here. I've already summarized it. And then they said that it is going to be recovered here. Then I can consider my tax saving. Year one, it is because we are paying in advance, the tax saving will begin in year two. So I have this. I have this. I have this. And I have this. So what is my net cash flow? Our discounting factor, 14%. So that is the discounting factor. So present value. And my NPV. So automatically we are going to reject this. So that is, I don't know if there's any information that I've left out in my calculation. I'm seeing some messages, probably there's something. So in that case, we are rejecting. Let me see what you are saying. Now, if there is no balancing charge, I mean the residual value, there is no need to calculate. No need to calculate the balancing charge on or balancing allowance. So how have we identified that the research cost because it was already incurred in the past before the project. Before the project, the research was incurred. So any decision you are taking now is not going to depend on the research that was conducted. I don't know if there is a question. So I was just showing you how to use information from the data. How do we link information and the question, and then be able to solve what we need. So this is a question that we have looked at, which was of 2016, and we have tried to link some of the data that we need, we have, they will have looked at them. So if there is no residual value, there is no need to calculate the balancing allowance. You only consider balancing allowance if there is a residual value. I think we can move on to our normal discussion that we are looking at, because we are still looking at how to handle questions or how to deal with the questions, and the point we are discussing is how to extract data from the case study, and I've given a worked example on how to extract data from the case study. Now, after looking at that, probably I can now look at the key topics that determines what are the key topics which determines success in this paper. Yes, Jaden. Hello, Jaden. Please, you can speak. Your microphone is open. Eric. Hello, Eric. Please, your microphone is open. You can speak. Please go on with your question.
Sir, I was asking, I was requesting sorry for the question one, which was saying about the acquisition of Gatins. If possible, you can also track on the steps, the requirements of these questions.
Which
Or
one?
the question related to acquisition of Gatins by shares or by cash.
I think that's where we started.
I am requesting you, if possible, to tell me in a few words the steps and requirement data for cash and shares only, not calculations.
If you are answering, because that's what I was explaining. If I'm evaluating, because in this case, you're evaluating two offers. You're evaluating a cash offer and you are evaluating a share offer. Those are two offers you're evaluating, because the question is about evaluating the offer made by by Simba. Now, if I'm evaluating a cash offer, what do I need to evaluate a cash offer? I need to know the value of the company before and the value of the company after, or the purchase consideration. I need to know the value of Gasins, what is the current value of Gasins now, and what is the purchase consideration. Or I need to look at the share price of Gasins and the offer price. Those are the two case scenarios you can look at. If it is a cash offer, look at the share price of Gasins and look at the share price, the offer price. Or look at the value of the current value of Gasins and the purchase consideration, and find if there is a gain or loss. That is what we have done. Now, if I'm evaluating a share offer, in that case, the offer is in terms of shares. What do I need to answer that question? I said you need to have an exchange ratio. That is the first thing. You need to have an exchange ratio. how many shares are you issuing to acquire? That is a key information in evaluating. The second thing that you need is the offer price. If it is not an offer price, how many shares? Because once you have the exchange ratio, you are going to know the number of shares you are going to issue. How many shares are you issuing? Then, once you know the number of shares you are issuing, then you need to know the price. What is the price of the price of the share? If the question has not given the offer price, you are going to value the shares using the price of the acquirer. So what is the current price of the acquirer? That is going to give you the share price. So look at the value of the share. I can still get the price of the share, the price, the offer price, and the current price, and then determine the gain or loss. But in a nutshell, when it comes to evaluating and you have offers, what you need to evaluate the gain or loss on each of the offer that has been made. I don't know if I've answered your question, Mr.
Lecture.
Yes.
Come again on how you identified that research cost is irrelevant.
How did you identify that the research cost is irrelevant to the question? Now, if you come to this data that we have been given, the question has said, the board is therefore desirous of establishing the financial viability of the potential housing project in the outskirts of Kigali. The estimated outline below are part of the research findings about the project. Which research had cost? It means this research has already been conducted. They are not going to conduct it, but the research has already been conducted. So, is it going to affect our decision whether to go on with the project or not? Because you have already finished carrying out the research. So in that case, that's why I have said this research is irrelevant. This cash flow is irrelevant. And that is the most important aspect when it comes to investment, identifying relevant cash flows to the project. Which cash flow is relevant, which cash flow is irrelevant. It's a very key information in answering this.
Lecture.
Yes, please.
It means that those cash flows which are irrelevant are the one which incurred before we start the project.
There are even some others. We know what we include in the irrelevant cash flows. But a sunk cash flow, a cash flow that already incurred in the past, is irrelevant. If it is a past. I hope I've answered you, Eric.
Yes.
So we are looking at, I was just showing how to get data from the question. How do you relate the question with the case study? Probably we are going to look at other case studies and see how do we get this data from the case study and how do we relate them to the case study and how do we attempt the questions. But as I was still talking about what are the key topics within these topics, or which determines the passing of this paper? Key topics. Yes, Sonia. Hello, Sonia. Sonia, I'm seeing your hand is up. Hello, Sonia. Now, when it comes to corporate finance, as I said, in the end of the exams, of course the syllabus is set almost 80% or 85%. That is the normal. The exam is covering almost 80% of the syllabus, but we have got some key topics which are very essential that determines your passing. And one of the key topics we are going to talk about is investment, and we have already looked at it. Advanced investment appraisal. Advanced investment appraisal. Advanced investment appraisal. That is one of the key topics that is very essential to passing of this paper. Now, what are the key aspects in this? First, you should know how to identify relevant cash flows. Identifying the relevant cash flows. That's when it comes to investment. How to identify that these cash flows are relevant, these cash flows are not relevant. Because once you fail to identify the relevant cash flows in the question, whatever technique you are going to use, you may end up failing it. If you don't identify relevant cash flows to the question. So the first issue is to identify relevant cash flows. Now, how can I know that the cash flows are relevant or the cash flows are not relevant? Relevant cash flows have got three main characteristics which you need to look at. They have three main characteristics. Characteristic number one, if you look at the characteristic of relevant cash flows, the first characteristic, they are future cash flow. I think that's what someone were asking. They are future cash flows. What do you mean by here? You are going to incur these cash flows as a result of the future decision you are going to make. Or they are going to affect your future decision. In that case, you are going to recognize these cash flows. Another important characteristic, which is when you are identifying, they are incremental. I can take you back to this question, where they were investing in working capital, where there was an investment in working capital. I want to show you something in this question. The question says, the construction site which is readily available would be acquired at 2.8. The house shall be built and completed in the year of sale. The project shall require to increase working capital by 1.1. So, if we say in year 1, year 2, year 3, and maybe year 4, and our working capital here, is 1.1, and it's going to remain constant throughout. Every year you will have the same working capital. In that case, our interest, it means here we are not investing additional working capital. Even here you are not investing. If you are looking for incremental cash flows, incremental working capital, if you are looking for incremental working capital, shall I have incremental working capital here? 1. If you come to here, you'll have this minus this, which is 0. There is no incremental. When you come here, still you are having this minus this. You have 0. So it means here there is no new investment was made in working capital. So at the end, you will only recoup this. I think that's what we have done in this question. But if the question had said that in year 1 we will invest this, in year 2 maybe invest 1,400, in year 3 invest 1,200 or 1,500, then in that case you'll have these ones as your incremental. Your decision is based on the increase in your cash flows or decrease. So it means here you'll have a working capital of 1.5 that you are going to recoup at the end. So look at what is going to happen to your cash flows as a result of your investment, whether there is an increase or a decrease in the cash flows. That's what we refer to as incremental. Does it make a difference when working capital is recoverable or not? A difference on what, Sonia? Make it clear. I'm not getting the question clearly. A difference on what? So that is number. Yes, Rugaruza. Rugaruza. Unfortunately, I can't get you. You raise the hand, but you don't say anything. The microphone is open. Please unmute yourself. C. Relevant cash flows are cash flows. So in this, what we mean here, that if you are analyzing, look at cash in and cash out. Cash in and cash out. What is the cash in? What is the cash out? So that is what we are going to look at in this aspect. So that is number 1. Number 2, when you are looking at investment appraisal, learn how to incorporate how to incorporate inflation and tax. Based on what we have discussed in the previous question, look at whether the cash flows are in current terms or the cash flows there is inflation. That is a very important aspect when it comes to investment. Do we have inflation in the question? Yes. The moment you have inflation in the question, it means you are supposed to determine nominal cash flows. If you have inflation in the question, you are supposed to use nominal cash flows. So, important, check if there is inflation in the question. Check if there is inflation in the question. If the answer is yes, then use inflate the cash flows, inflate the cash flows, and use and discount using nominal rate. That's the second aspect when it comes to this. Check if there is inflation in the question. If the answer is yes, then you are supposed to inflate the cash flows. And when you are discounting those cash flows, you should use a nominal rate. If I can take you back to the question we were doing, I can show you, like here, the question had given us inflation, which we did here. We inflated our cash flows. Then after inflating the cash flows, all our cash flows were inflated. But the examiner in the question gave us two rates. The examiner gave us a real rate and gave us a nominal rate. If you are not very careful, you may end up going with the real rate when you have already inflated your cash flows. So the moment that you have inflated the cash flows, in this case, you are supposed to use a nominal rate. So that is how you are supposed to make these adjustments. Now, you have inflated your cash flow and you said you discount using a nominal rate. Another important aspect is check if there is tax. And when to be paid. That's another information that you need to look at. Check if there is tax in the question and when tax to be paid. And then also with that, go hand in hand, check if depreciation attracts tax. Check if there is tax and when to be paid, and check if depreciation attracts tax. Now, when you are answering this part, if there is tax and there is depreciation, if there is tax, I think I can say if there is tax and depreciation, if there is tax and depreciation, compute the tax payment, compute the tax payment from the profit and consider the tax savings. This is what we have done in our previous question. I can refer you to the previous question that we have done in this part. If there is tax and a depreciation, compute the tax payment from the profit and consider the tax savings on depreciation. I can bring you back to the question that we have done. After we have made our after making our analysis, because this question, it told us the tax is paid 1 year in earlier. It means this tells you that the tax of year 1 is in year 2, the tax of year 2 is in year 3. That is a key information to identify. Then apart from that, the question told us depreciation will attract tax at 25%. In that case, I need to compute my tax saving. I can even compute depreciation alone, depending on the method that you want to use to compute. So that is what we did here. We got our contribution, we less the infrastructure, we get the EBT, then we charge the tax. Since tax was being paid in 1 year and earlier, we started paying tax in year 2. Then recognize your tax saving in the question. So when you are answering this part, then try to analyze those aspects in your question. I think we can look at probably another question on investment. Now, if they say the working capital will be recovered or not recovered, no, it depends in this case whether it is going to increase or it's not going to increase. So if the working capital is going to increase and the problem is not going to be recovered, in that case, you will be only recognizing an outflow only. But the calculation will be the same. The calculation of working capital will be the same. How much are you investing in your working capital? Because what you look at is the incremental working capital. On the future, does it mean cash flow in the future decision you made in the future made those cash flow or to be future cash flow? I got confused. Okay. It means in this case that the decision you are taking is going to affect, or the cash flows will affect your future decision, or your decision may have an effect on those cash flows. I can give an example. If you are maybe, I'm having like if you have a building, probably if you have a building and you want to install a machine in a building, but installing a machine in the building is going to require you to dismantle part of the building or part of the rooms so that the machine can fit. The dismantling cost of those rooms is going to be relevant because it is affecting your future cash flows. But the cost of the building already there is irrelevant. The cash flow you're going to incur as a result of the decision are what we call the future cash flows. Can you also look at the APV question involving business or financial risks? Probably if you can get it, yeah, if there's no inflation, use the real rate. No, if the
Lecturer,
examiner has not accepted, yes,
on that question, I have done rating too much.
uh,
Always on question is rating too much. We make those computations
related to
too much and acquisition.
uh,
We make those only those computations.
now the issue that in this question, which related to merger and acquisition, we are not given some key information, and we needed to get that information to be able to compute. That's why we had to compute those information. Yes, William, I'm seeing your hand. Hello, William. Yes, William. Hello, William. I'm seeing your hand, but you cannot talk. Probably your network is not okay. Hello, William. Can you speak? Let's move fast because we also need to look at maybe another example, probably as the member is suggesting. So that is one that we are looking at. Let's move before we finish this investment, and we look at other key areas that we need to look at. Then another one, after looking at how to incorporate our information and how to incorporate tax, another thing that you need to look at to know about investment is the lease and buy. Lease and buy decisions. I think many questions, there are very many questions that are always asked in this part, the lease and buy decision. Now, when it comes to lease and buy, it's about evaluating how to acquire an asset. Should we acquire an asset on lease or should we acquire asset on purchase? Now, what do I need me to answer this question? Or which information, which data do I need to be able to answer this question? I can refer you to probably the question of last sitting. Let me see if I can open it. If I have it, it is here, I think. Which can help us to move on with this part. Now, when I'm answering a question on lease or purchase, because in this part, I'm evaluating two decisions. I'm evaluating a decision to lease and a decision to purchase, to buy. So what is the basis of my decision? The basis of my decision is to look at the present value cost, present value cost of lease and the previous cost of purchase. If I'm to look at this, I need to get the present value cost of lease and the present value cost of purchase. So how can I get this? So if I'm evaluating a lease, what do I need to evaluate a lease? What are the cash flows relevant to a lease? So what are the relevant cash flows here? As far as the lease is concerned, probably you need the lease rental, the amount you are paying on lease. Now, where you need to be very careful if there is tax or no tax. If there is tax, because the lease rental is an expense, you expect a tax saving. But if there is no tax, then you don't have a tax saving. So if there is tax, consider a tax saving. In case you have tax, you are going to consider a tax saving. So these are the relevant cash flows as far as purchase is concerned. Now, suppose I'm dealing now with a buy decision. Suppose I'm dealing with a buy decision. What do I need to identify in the question? I need a purchase consideration. The purchase cost. What is the purchase cost? I need the residual value if it is given. I need a tax saving in case a tax allowable depreciation, in case there is tax. In case there is tax. In case you have tax, you will need a tax allowable depreciation. If there is no tax, please don't have anything with tax allowable or depreciation. This should only be considered in case you have tax. Then what else do I need? The maintenance cost. I need the maintenance cost. So once I have this information, I can be able to get the present value of the purchase. But be very careful with this. Only consider this if there is tax. If there is no tax, please don't consider these ones. If I can see this question probably and see this part which was This is, I think, question 1. August. I've only wanted to look at. Yes, someone who wants to ask. The microphone is open, please. You can ask your question. William, the microphone is open. Or Aphrodis. Please, you can ask, the microphone is open. Now, if you look at this question of last sitting, if you can go through it together to understand it and relate it to what we are talking about here, it says, the management of Rukarakara Rwanda Limited is to source a financing for specialized equipment with the expectation that it will be used for an important upcoming project. R Limited can either lease the equipment or outright purchase it at a cost of 550. So if it is to purchase this machine, the purchase cost is, that's the first data that I have. The purchase cost is 350 million. That's the data. The equipment will be used for 4 years. Useful life or period. Useful life of this asset is 4 years. And they have told us it will have a residual value of 12%. So residual value, if I can summarize this data, residual value at 12% of its cost. So it means I get this times 12%. So that is the residual value. Then they are telling me okay, that is the data. Now that is the purchase decision. This is a purchase. If you are to purchase, then other limited can borrow at an interest rate per annum while there is payment. So it means our cost of debt is 18%. Well, the annual lease payment in the first year is this, with an expected annual growth of 3% in subsequent years. So if they are to lease the asset, if I check here, maybe lease, if they are to lease decision, if it's a lease decision, in year 1, year 2, year 3, and year 4, year 1, they are going to pay our lease rental. Lease rental in year 1, it is 105, and they say from year 1 it is expected to grow by 3%. So it means here it will be 1.03 times this, and here 1.03 times, and here it will be 1.03 times. These are going to be the lease rental. I think I can have just rounded off. Okay. Now, what else do you have? They have said if the purchase, if purchased the equipment maintenance cost will be 13 million in the first year. If you purchase the machine, the maintenance cost will be maintenance cost. Maintenance cost in year 1, year 2, year 3, and this is year 4. If you decide to purchase the machine, the maintenance cost in year 1 will be 13 million. And this is going to grow by 4%. Both lease payment and the maintenance cost are incurred in the start of each year. Okay, that is good. So it means you are beginning from year 0. So it means here 1.04 times this. $1.04 times this, and here 1.04 times this. It will. Okay, let's make it like that. Now, I've already got my cash flows. So what is remaining is to make my decision. This question is very clear. There is no tax. You don't need the tax effect. You don't need to depreciate the asset because you don't have tax. You don't need to get to change your cost of capital because you don't have tax. Don't assume anything the examiner has not given you. So, if I'm to answer this, if I'm to take this decision, because we are paying from year 0, I
Sorry,
recognize year 0, year 1. Yes, please.
on that last sentence,
Eh?
which on that sentence, which concerns this payment and maintenance costs are incurred at the start. What's its implication? Can it affect or?
Yeah, we are starting in year 0. That's why I've said we are starting in year 0. And that is what we are going to have. Yes, please.
None si ubwo gutyo bavuze ngo ati start biba bivuze ko uza guhera muri year 0 cyangwa ubwo ngubwo
Yes.
hari ubundi buryo babitangamo noneho ugahera kuri year 1.
If it is at the start, it means year 0. Is it okay, Rick?
Ubwo noneho bavuze at the end.
That's when you are starting at year 1.
Okay.
Yes. This is our rental. And we have been given our discounting factor at 18. So in this case, I will have 1 divided by 1 plus 0.18, then power so PV the present value cost of lease will be, then I sum this will be the present value in the case there is to be you are to take a lease. Now if you purchase, if you go for purchase option, you will still have this cash flow this period. Then I'm going to recognize my purchase cost, which is 350, and I recognize my residual value in year 4, which is 42. Then I recognize the maintenance cost, the maintenance cost. The solid is also starting from year 0. So I will have it here. What is maintenance cost? It is here. So what is my net cash flows? These are net cash flows.
Correction.
Yes, please.
I think that's residual value will be positive.
Yeah, the residual value is positive. Sorry. Yeah. I think that's the message I think I was getting from other members. Discounting factor. You can copy this. I can do here. 1 divided by 1 plus 0.18 power. So my PV so what is my present value cost? This is what I have, and this is what I have here. So automatically it is cheaper to lease. It is cheaper to lease the asset. I don't know if So you see how we have used this data that we have. Yes, Aphrodis, the microphone is open. Please, you can ask your question. Let me see the question I have here. When do you add back? When? Okay, Sonia, it depends on the method you have used. If you have used the, because we have got different methods to adjust for depreciation. One method, you can add back a depreciation, charge tax. Sorry, you first less depreciation, charge tax. After charging tax, add back a depreciation. That is one way to handle it. But the other way to handle is to use the tax saving. Please unmute yourselves, Aphrodis. All microphones are open. Unmute yourself. Paying tax at the end and in area are different. It depends. If it's very area means at the end. But 1 year in area, that's when you have the year back, the 1 year after. Yes, Janvier. Janvier. Please, the microphone is open. You can ask your question. I don't know what has happened. I think I've collected discovery here for this. Please ask your question. The microphones are open. So that is what I wanted to show you in this part, that use the data the way they have given them to you and get them from the question as you have seen here in our part. So, time is almost getting us, and we are on one part of the question. If I go to part 4, yes, Janvier and Aphrodis, the microphones are open. Please unmute yourself. Unmute yourself, please. I've opened you. There's no way I can now answer. Please, you can send your question to the chat room such that we can move on. So we are looking at these ones, and
Hello.
yes, please.
And that question is about the trees and or.
What is it? I'm not getting you well.
And the first question is about the
About
trees
lease.
or by maybe the scrap value have not been accounted for in the purchase decision.
Yes, we have looked at it. It is here, 42.
So, and a question I have: what if the amount used to purchase equipment have been also brought from the bank? Suppose that the purchaser needs to invest in equipment, but there is no finance in hand, so that sometime he may be need to borrow it from the bank, for example, how this will affect the result by the civil.
Now, because what we are now having, for example, here, even this question, I think that's how it is, Mister. RMT can borrow at interest that even if you have borrowed the money to finance your decision, what you are looking at is the cost of debt. Because you are using the cost of debt, it is going to have the same effect. You are not going to recognize the interest from the bank. What you are only recognizing is the cost of debt, and you are going to use the same cost for both decisions. The cost of the money you are using to pay. That's what you are going to use for the same decision. I don't know if I've answered you, Mister. That you have borrowed the money.
Means that the interest from the bank to be paid on the bank loan will not be
No.
will not be accounted for in the purchase decision.
No, you cannot, because you are using the cost of debt to discount your cash flows. So it means that is included in the cost of debt.
So I have a question also. What if there is a cost of capital and the cost of debts in this question? So you may find what for to discount.
It depends. That is going to depend on how you are going to finance the purchase of the asset. If the asset is going to be financed by using both equity and debt, then it means you're going to use wachacha. But if the asset is going to be financed by debt only, then you only need the cost of debt.
Understandable.
Okay. So the other part that I want us to talk about, but time is almost taking us at a very high speed, is capital rationing. Very briefly, we can talk about capital rationing. Now, when it comes to capital rationing, there are two things that you are looking at. Because capital rationing, apart from the theoretical hard capital rationing, soft capital rationing, our important aspect here is how do we make a decision under capital rationing. And when you are making a decision under capital rationing, there are two things that you are looking at. If the projects are divisible, we said rank the project using PI and allocate resources based on the PI. Allocate resources based on the PI. Allocate the resources based on the PI. If projects are not divisible, that is the only thing that you can talk about. Not divisible, if the projects are not divisible, in that case, you are going to look at the combination with the highest NPV. Combination with highest NPV. Only that, when it comes to capital rationing, check if the question has specified that the projects are divisible, then rank according to the NPV. If projects are not divisible, then in that case, what you need to look at is the combination that which gives the highest NPV. So another thing before we leave this part is that is part 5. When we are discussing this, is the replacement. Replacement decision. That's another thing when it comes to this replacement decision. Now, when I'm evaluating whether to replace an asset or not to replace an asset, what information will I need in the question? Now, when it comes to replacement, I think there are three important aspects that you need to look at. The first aspect is to decide when to replace the asset. Deciding when to replace the asset. That is the first thing that you need. That's the first thing that maybe you need to know about replacement. Deciding when to replace the asset. And when you are dealing with this, what do you need in this case? You need the present value of each cycle, present value of each cycle, and the two, you need to get the equivalent annual cost of each cycle. I think that is simple to get it. That is evaluating, deciding when to replace the asset. Another thing, evaluating the two assets, evaluating two assets to replace. Evaluating two assets to be replaced. This one, what you need, get the present value, cost of each cycle of each asset. What you need here, get the PV cost of each asset and the equivalent annual cost. Only that, and then you make a decision where you minimize that one, the cost. Then the third one, when it comes to replacement, which is very common, replacing a continuing an old asset with a new asset. Replacing an old asset with a new asset. If you have an old asset and they want to replace it with a new asset, how are you going to handle this? That is, I think, the most part that is need for your much consideration. There are a few steps that you need to consider in this. The first step is to determine the incremental investment cost. What is the incremental investment cost? Look at the cost of the new machine, look at the market value of the old machine, consider any gain or loss, and determine the incremental investment cost. Now, number two, incremental depreciation. This one is not challenging. Look at the depreciation of the old and the residual value. I've combined them together. Incremental depreciation and the residual value. Look at the depreciation of the old and the depreciation of the new. Look at the residual value of the old, residual value of the new, and then come up with the incremental. Then number three, which is a bit challenging, incremental incremental cash flows. Here, you need to look at what are the cash in as a result of the project. So when you are handling this, you are going to make two parts. You'll make a column when you are handling this. The easiest way to handle this, you'll have an old machine or old asset, and then a new asset, and then another column will be the change. That is the best way to handle this. Have the column showing the cash flows of the old asset, the cash flows of the new asset, and the change that is going to happen. Example, if the current sales, let's say my current sales is 100 million, and after introducing the new asset, my sales are going to be 120. It means my relevant cash flows here will be 120 minus 100. Then I can get my change. If my operating cost, for example, I can stop even on this. If my operating cost was 50 million. After introducing a new asset, the operating cost is going to be 30. In that case, I'm having a cash flow, a decrease in the operating cost of 30, of 20. So check. That is the easiest way to analyze this. Look at what is my cash flow related to the new asset, what are the cash flow of the old asset, then I get the change. Then I use the change to get my net cash flows. I think that is a good summary on this. So the last one, as we are going to APV, because I've seen a member asking about it, the last one is incorporating heuristics. I think that is number 6. So this was replacement was number 5 on investment, and this is number 6 when it comes to incorporating heuristics. Incorporating heuristics. So when it comes to incorporating heuristics, the easiest parts are those ones. The first one is to get the estimated expected values using probability. Using probability. You're going to get the expected values in probability. You can use what we call the certainty equivalent factor. Or you can use sensitivity analysis, where you're going to analyze the variable per variable, or you can do a simulation. These are methods that you may need to know how to use them as far as incorporating heuristics is concerned in an investment. So that is a simple summary on investment decision, advanced investment decision. We have looked at some questions, we have looked at some issues. I think it can help you as you are preparing how to know I'm not getting start on year zero. Because I think the question was clear because I think you were asking on the previous. The question was say you are it is at the start. If it is at the start, it means it is year zero. What about additional working capital in the incremental cash flow analysis? That I think I talked about it. Additional working capital, those are relevant cash flows. The anonymous attendee. So if you have additional working capital, those are relevant capital, relevant decision, relevant to the decision to invest. So I want us to move on to APV, and I need to look at a question that we can try on APV. APV, that is adjusted. I think someone was asking about it. Adjusted present value. Now, when it comes to APV, there are few steps that you need to undergo when it comes to APV. Few steps. Because APV, it is that you are incorporating the Mudigana and the Mira with tax. So you are looking at the effect of tax, effect of the financing structure on your on your investment project, on investment decision. That is the APV. Now, when you are dealing with APV, there are a few things that you need to analyze in the question. So the first thing you need to analyze in the question, or you need to look at, because APV is based on 3 steps. Step number 1, you need to determine the value of an GRD business. Determine the value of an GRD. You need to determine the value of an GRD business. What is the value of a business that is not GRD? Now, once you determine the value of an GRD business, and here that's where you need to be very careful. Look at your cash flows. What are the relevant cash flows in the question? The relevant cash flows in the question. And these cash flows should be discounted using cost of an GRD business. That is where you need to be very careful. You need to get the cost of an GRD business. If you are dealing with this, you need the cost of an GRD business to discount the cash flows. That is where now APV is. And how are you going to look at this? Look at the cost you have been given. Look at the data you have in the question. That is, those data will help you to know whether the cost is geared or the cost is not geared. If you have a KE is a cost of equity of a geared business. What you need is the KU, cost of an geared business. So get the cost of an geared business, use the cost of an geared business to discount your cash flows. And as I'm emphasizing here is that look at the data that you have in the question. Then another thing that we can talk about here, which is part B, get the present value of part 2. Present value debt tax. What is the present value of the debt tax shield? So look at here, it has different aspect. You may need to look at the interest on the debt. You may need to look at the issue cost. You may need to look at the interest saved, whether there is any saving in interest. For example, if part of the loan is subsidized, in that case you may have an interest saved. So evaluate all the cash flows that are related to the debt. And then get your present value of the debt tax shield. Then the last step is to get the APV. That's step number 3. Get your APV, which is equal to NPV and GEAD plus your debt tax shield, or present value of the debt tax shield, PV of debt tax shield. In summary, that is how you are going to look at APV. So I don't know if there is a nearby question we can go through to get the data from it and see how to handle this. Let me see if I can have a question here. equal. So I want us to also look at this question, and then it can help us to time is getting us. So I wanted us to go through now what is required in the question. This is a case study of 2020 December question 1, and we can first know what is required. What is required by showing all relevant calculation that the expert are likely to go through. Calculate the project PXP APV and advise whether the project should be given a go or go no go, stating your reasons. That's the first part. For the upcoming payment, compute the total future payment. This is the hedging. We shall discuss this one in our next discussion. For hedging, we are not going to answer part B. Part C, using relevant financial evaluate and comment on performance. This is also use working capital by focusing on profitability, use of working capital, financial risks, and liquidity. So this is the question that is specific on a specific part of the question. So if I'm answering this question, here I have 26 marks. Here I have part C. My answer I should first start with part C of the question. If I'm answering, this is very simple to get, and it requires me how many minutes? 17 times 2.1. It requires me 35 minutes. Within 35 minutes, I can answer this part. Then, if I check this part, because I can show you how you can calculate your time, 26 times 2.1. This requires me 34 minutes, 54 minutes. Now this part B, that is 7 plus 2 plus 5, those are 7 marks. It requires me how many minutes? 7 times 2.1. So if I add all this time, I must get the half of the time I'm supposed to use on this question, plus this, plus this. That is 105. So it means these are the minutes that you have on this particular question. So if I have these minutes, I can start with this one. This one is very simple to get to do. Even this one is not very hard. I can get it very fast. Then my last part will be this. If my minutes goes without finishing it, then I can score some marks on it. But I know that I've scored 17, or I've got 15 here. I've got maybe 6 here. Those are 22, and maybe I've got 10 here. I'm already in the 35 marks in this question. So learn how to plan your question. How to attempt your question. Learn that one. Plan how to plan. Question plan. It's very important in your success. So it means, where is my part A? I'm evaluating. Which data do I need to evaluate? I can't use this one to evaluate. So this is the project I'm evaluating, project PXP. Now, if I go through this project, its first object, that and that, PXP will last for 3 years with the initial investment. So year 0, if I can make it something like that, time is taking us at a very high speed. This is year 0, year 1, year 2, and this is year 3. That's what the project is going to to take. And based on this, they said the project require initial investment. So if I'm getting my data, my IO is 1,500. That's what it requires at the start. And then they say sales revenue are estimated at 123. My sales are estimated at 1 here, 1, 2, 3, 2 at the first start of the year. Second year, sales in second year and third year I expect to grow. So here the sales will grow by 24%. So 1.24 times the sales here. And here the sales are going to grow by 18%. So I have 1.18 times. So those are my sales. I can come back to the question. Then they say each year in contrast, the inflation rate applicable to revenue is expected to remain at 5%. Oh, we have inflation. So inflation is 5%. So it means here, if I cut 1.05, this one will be this, power this, and here it will be that. So my nominal revenues, I'll have them as this times this. I'm trying to rush with time, and I want us to have got some of the data that we can use when we are solving this question. Now, which other information do I have? I've already considered the inflation. Then the project costs are expected to grow in line with the inflation. So what are the project costs? So my next working, probably I can put a working. This is year 1, year 2, year 3. Our costs will be, based on the data we have, the cost is 765. 765, and they are going to grow in the same, similar to with the revenue. So it means in the first year it will grow by 1.24 times this, and the second year will be 1.18 times this. Ooh. Then I have already got that data. Interest payment will remain the same throughout the project of this. The interest payment is irrelevant to the question. I don't need the interest payment. Oh, maybe for APV. So the interest payment is going to be the same. Interest is constant throughout. This one will help me when I'm computing the debt tax sheet. And they told us it's going to be 213. I thought we were analyzing the normal project. Then they say 40% of the required initial investment will be allocated to purchase of equipment. So we need this one, purchase of equipment. Purchase of equipment. Purchase of equipment, it's going to be 40%. So this is this one times 40%. So it means I'll spend 600 to purchase equipment, and the equipment will have a residual value. My residual value of the equipment is 55. Allowable depreciation on equipment is on straight line basis with discount to eventual sales. So we are going to divide this, our depreciation is on available on straight line basis with discount to eventual sales as a scrap value. So it means it's going to be 600 divided by 3. That's the depreciation. It is constant on straight line. Then they said working capital will provide at the start of each year and estimated to be 25 expected sales in the same year. So working capital will be provided at the start of each year. So if you are provide, this is working capital. My working capital is 25% of sales, but it's at the start of each year. So it's going to start in year 0. It's going to be 25% of sales. So this one times 25%, I get the working capital. I think these are my sales. I don't know if I've covered them. So these are my sales, 25%. M98. Okay. If I will not put it in the right one. Yeah, it is true. So this is my working capital, and I need to get the increase in working capital here. So increase, I think once I summarize this, you can, here you invest this, minus this, and here it will be this, minus this, and you are going to recoup 603.9. That's what we are going to recoup at the end. Then they say the project tax will be, tax is 30%, at 30% in the same year. Oh, I skipped this information. Okay. Then they say it's when the project will entirely be financed by debt, multiple lenders. So the issue cost on the debt, issue cost, that is 3%. So the project originator said that the uniqueness of the project is to business model. Cancel this one. Can you bring to it? The data is financed by both debt and equity. 30 million shares. So what is the value of equity? Value of equity, or value of equity, I can maybe use this. Value of equity, we have got 30 million shares, and each share is So I can maybe use price per share. Price per share is 1,260, and the number of shares is 30. So it means my VE, value of equity, is this times this. That is the value of equity. Then value of debt is given. Value of debt is 1,000, 12,000. So what do I need now? I have equity beta equity beta 1.7. I have the market risk-free rate, which is 3%. I have a market premium, that is RM minus the risk-free rate, is given as 9%. So these are the relevant data that we have related to this question, which we needed to use when we are answering this question. So I've tried to summarize this data from this question. So by this, I almost like 40% finished the question. They told us, someone asked, what's the importance of residual value? The question told us to ignore the residual value. That's why I have not considered it in my calculation, because they told us to ignore the residual value. Cost of, oh, I had a 3% inflation. I think I've not seen that one. Maybe I'm moving very fast. Where is the 3% inflation? Okay, okay, there's a 3% inflation on this cost, so I'll not yet check to that. So inflation, 3%. I'm rushing because of this whenever I check the time. So in this case, the inflation will be 1 plus 0.03 power this. Now, what my interest may not have to solve the whole entire question, but to provide you with a guideline on how to go about it. So, I've rounded off. I have my cost, which are those. I have my revenue already. I have the investment cost, which is that. Then I have working capital, which you have here. Maybe plus this 323. Yes, okay, someone will see, I think I'm seeing Janvier, I'm seeing Muko. Please, you can ask your question. Your microphone is okay now. Janvier, you can ask your question, please. I'm seeing your hand up.
So no, I don't have a question. It was hands up for my first question I asked, but now I don't.
Okay, it's okay. So now, what I wanted you to show here
bataba muri calculator. Nsigaye yaribereye umunyamugi. Nagutumye n'agasentire noneho kanzaniye.
Now, if I check this question, or if I check this, my interest here that I wanted to show you here is this. I think after getting this, we have all the data that we need. What is remaining is to discount our cash flows. But if you check the question here, it has given us an equity beta. We have been given a risk-free rate. We have been given a market risk premium. You cannot use these ones to determine the cost. So you need to get an asset beta and use asset beta to go to the cost of ungeared. So in that case, I need to get the asset beta, which is equity beta times VE over VE plus VD into 1 minus T. So I can now substitute to get my asset beta. Once I have the asset beta, I'm going to have the cost of ungeared. So you see how to use the information you have. That's what I'm trying to show you. We know that I need to discount this, but from the information I have here, I need to first get an asset beta. So once I have an asset beta, then I can use the asset beta to get the equity, the cost of ungeared. So what is going to be the cost of ungeared in this case? So once I have this, I think we can use this data. I don't know the denominator here. If I have this, VE is this plus, will it be possible? VD, which is this, times 0.7. And up here, I'm having this times this. Then it means my BA will be this divided by this. So that is the cost of an, if I can summarize this, that is the cost. So once I have this cost, then I can get the cost of ungeared, which is risk-free rate 0.03 plus 1.39 times 0.9. So I will have 0.03 plus this times 0.09. So in that case, our cost of ungeared is almost 15.5%. So once I have this cost of ungeared, then I can arrange my cash flows to get the value of ungeared. So I think now you can be able to do that since you have almost, that's what I was telling you there. Look at those steps. Get the value of ungeared. So if I'm to assemble my cash flows, then in that case, you can get what you want. I'm seeing time has gone. I may not be able to finish this question, but at least I've given highlight on how to handle this question. So in that case, you're going to get year 0, year 1, year 2, arrange your cash flows. This is your revenues, these are the costs, this is working capital, this is the investment. Then I don't know that they have told us we need to depreciate the asset, whether we have depreciation. I'm not seeing it. So, dear members, as we have said, we have seen, we have looked at this, and I hope there's something you have got from this. So this is I can call it the discussion part. I can call this one the question. Case study. And this one we have not attempted it. We shall attempt it in our next class. This I can call it example. So I wish to stop here. I don't know if Strato is still in the house. So I wish to stop here, and then so we have not yet finished the cost, Eric, because yes, I'm seeing some hands. Yes, someone who has the question, Muko. Someone with a question? Yes, Eric. Please, your microphone is open, Eric. Hello, Eric.
Director,
Yes. Hello, Eric. Yes.
what about issue cost and what rate can we use to get tax rate on interest?
Okay. So okay, let's also look at this. So okay, let's also look at this. Please, can you mute? Now, what we have done here is this data can help us to get the NPV of an GIAD. Now, the question has given us, we remember the question had given us interest. I don't know where I summarized it. We were given interest. What is it? Yeah, I'm looking at a different question, I think. Okay, what is the interest given? Our interest is we have been given as 213. That is the interest. Now, we know the loan we need. Our loan is 15 because that's the money we need to invest. That is the loan. And this is the net amount. So our issue cost will be 3/97 times 15. And that is going to give me the gross loss. It's going to be this times 3/97. This is the issue cost on this loan. So in that case, what is going to be my gross loan? Gross loan will be this plus this. That is the gross loan that you require. Now, if this is the gross loan and this is the interest, what is the interest rate? The interest rate on the loan, it is this. I divide by this because it's going to be constant throughout. It means the loan is issued at 14% or at 13.8%. Now, once I have this becomes my cost of capital. So when I'm dealing with this, first I already have the interest. So I need to get the present value of the debt tax shield. Now I'm going to first start with present value on the interest. Present value on the interest. Our interest is 213. Tax at 30% will be 30% times, that is the tax. Now, what is the annuity factor? Annuity factor, the annuity factor of 14% or 13.8%. It depends what rate you are using. So in that case, I get it, then I can get the present value of this loan, of this interest. Then another one, I have the issue cost, which I already calculated here. So these are going to be my debt tax shield, and the value I'm going to get here after getting the annuity factor.
Selection.
Yes, please.
Yes, please. Ko hari aho usanga ba discountinze bakoresheje risk free rate. Risk free rate.
Ah, is it a government loan? No, I don't think that is okay, because if you are getting an interest on this, why would you discount using a government a risk-free rate? Please, you can check that data. That is what it is. So I think that is what it is. So oh, I think let's stop here, and then we can discuss in our next discussion. We shall look at two things or three things. One, we shall look at hedging. We shall look at also some parts of mergers, and also look at portfolio theory. And then I think you will be ready to attempt the question. So thank you very much for attending this coaching. And on behalf of ICPAR, we have closed today's discussion. I don't know whether in the